Yeah, coffee's like wives. I don't, I don't know. Oh, you like the T-shirt, Gee? Yeah, wicked smart. Yeah, look, all you have to do is go to Harvard, and they'll sell you one. You know, it's a funny thing too because you know, whenever you go to university, all university students do this, especially in America at least. You want you want a shirt or a sweater or something that's got your university on it because you're super proud, right? You gotta have the name. So, you know, I get accepted to Harvard and I'm all excited. Yay, you know, one of the best schools in the world, probably the best school in the whole world, right? So you go to the bookstore and you're like, man, it's all, you know, this university's great, all the smartest minds on the planet. Go into the bookstore and it's like $120 for a cotton sweater, or not sweater, sweatshirt. You're like, if I bought it, I think it's a test, right? If I paid that much for a sweatshirt, I would fail some sort of test and they'd kick me out, right? Like, what kind of idiot would pay that much money? How stupid, right? They're like, oh, that guy right there bought a sweater. Kick him out. Send him to Yale. Gee whiz. No, sir. So it's like some weird test, right? What? 120 bucks? Yeah, it's like a test. Like, what kind of moron would do that? So, anyways, let's clean up and let's get going, huh? Well, DeBista, I actually found one of the factories in Guangzhou, actually, where I was just, that makes the sweatshirts for Harvard. So I'm just going to buy directly from the factory for, I think they're $24. Because I'm wicked smart, eh? So anyways, good morning, everybody. Welcome to Forex.Today. My name is Wayne, and I want to hear, I'm here to remind you that Forex trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Well, there I am. Hello. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay. We want to be your Forex trading partner. That's why we do these sessions. I want to help you develop the skills to be successful. Whoop, whoop. So hopefully some of you guys are becoming more and more successful every single day we do this because it's difficult. That's why I'm here. But over the course of time, I'm hoping you will find success. And one day, you'll be confident enough and successful enough to open up a real live account with real money and start your Forex trading career. And we want to be your prime broker throughout that process of going from a live account and then growing it into a huge account. That's my goal, to help you succeed. And then maybe you'll pay it back and choose us to be your broker for your successful Forex trading career. Do these sessions every morning, 7:30, which is approximately London lunch. Swing on by, TradersWay.com. At least open up a demo account, test out our execution, get to know our customer service. And every Friday I'm at FXStreet.com, where I am Forex speaker of 2016. Yep. Which ain't bad because they got a lot of speakers, huh? Well, Fred says, Wayne, for swing trades, do you mostly use weekly pivots for your trading plans? Well, Fred, look for clusters of weeklies and monthlies. Okay? Yep. All right, what's going on in the world today? Australian Westpac Consumer Confidence Index, 103 versus 95 last month, huh? The highest since July 2010. So Australians are feeling good, feeling confident. They just love slashing interest rates, making money free and cheap. Yeah, that's it. Good job. Yeah, Australia's feeling good. Month over month, 8.5. Month before, -4. What a swing, huh? So all you have to do is make money cheap, practically free, and people start to feel good. As you know, based on what we talked about yesterday, you could have traded the Asian session. And the big news yesterday was actually the Kiwi released a bunch of data, did some speeches, did the whole kit and caboodle. Could have been there, watched it happen. Governor Wheeler spoke in Parliament, clarifying that the Royal Bank of New Zealand is seriously looking at further measures given the bank's concern. So whatever that means, seriously looking at further measures. Is that cutting interest rates? Could be a rabbit, could be. No specific timing. I don't think they'd do quantitative easing if interest rates are so high, right? But, you know, I don't know, maybe it's the opposite. Maybe it's raising interest rates. Because what they have this problem, and it's called housing prices. Check out the news yesterday. Home prices were up 7.7% year over year, double the previous year. Home sales, 20%. Home sales up 18.4%. Holy smokes, huh? Those are some big numbers. So maybe they're actually worried about that and they want to cool that off. And did you trade the Korean won yesterday? Unemployment rate falling even lower. You know, when you're at 3.8, I think it's difficult to get it to be 3.7. So, like, that's amazing, right? 3.7%. Wow. Amazing stuff. Good job, Korea. All right, so what happened in Europe? UK industrial production, mixed bag. Up for the month, down for the year. Manufacturing. Okay, 0.1%. Good job not having a negative number. And this is where I kind of chuckle. Like, really? Are they that good that they know the difference between 0.0 and 0.1? Really? What kind of rounding error do they have? 1 full percent? You know, like, really? All right. 0.1 it is. Who am I to argue, right? Year over year, -2 as expected. Now, how about this? Iceland kept their interest rates the same, 5.75. Anybody got a huge carry on Iceland? There was a time back in the day before the crisis, back when irrational exuberance was normal. Iceland had something like 13% interest rates. And there was actually a day, it was kind of interesting how life can sometimes go. I'm in New York City. And I'm sitting at my old haunt, the Bull and Bear at the Waldorf Astoria, hanging out with J.P. Morgan's ghost and a bottle of, or a glass of 18-year-old Macallan. She was legal. And CNBC, I think it was, used to do like a remote thing every Friday afternoon. They would actually broadcast live from the Bull and Bear. And so I just happened to walk in Friday afternoon. I'm like, oh, man, what the hell's this? The TV crews are there. There's lights going on. The place is crowded. Bunch of tourists sucking my air. And so I asked the bartender, I'm like, hey, man, what's this all about? And he's like, those are Iceland bankers that they're interviewing. Yeah, that's how red hot Iceland was. And I'm not joking, like maybe 2 months later, the world ended, financially speaking. And, you know, Iceland sunk into the sea, financially speaking. And all that was over. But talk about hot money flows. Yeah, they arrested some of the bankers there. Yeah, it was just amazing. The whole thing was some weird Ponzi scheme. I don't know, but Iceland was paying 13 point something percent, maybe even higher. I can't remember. So can you imagine the carry trades on the Iceland yen? Let me put this in perspective. You're leveraged at that time 200 to 1, 300 to 1, 500 to 1, because back then leverage was a lot higher in the United States. It wasn't 50 to 1. Normal was 200 to 1. And then, of course, you could get 1,000 to 1 if you wanted. So imagine your leverage, let's say 200 to 1, right? So what is that, 260% interest payments on your money every year? 260% just on the interest? Because you're leveraged, right? So you put in $1,000, or one standard lot, which is, let's say at the time, about $1,000 worth of your money. And at the end of the year, if you made no pips, you'd be up, your 1,000 plus the 2,600. So your account would be almost $4,000, and you haven't made any pips yet. Wow. So, anyways, maybe we should sneak back. Yeah, sneak back into that. 5.75 is not bad, right? It's not bad. Okay, what's going on today? Again, no real news going on in the United States of America. Right? We got some crude data. Fine. Must be a Wednesday. What do you do on Wednesdays? You trade the Canadian dollar, eh? Anything else? Yeah, so I think that's about it. So are you guys sad that maybe you weren't around for the 260% annual interest rate on Iceland? It's like you watched it in a documentary on the History Channel. I was there. I was there. All right, so let's play the happy music and then go to the charts. Oh, what happened to that? Did we just lose the happy music? Why did it disappear? Oh, hang on. Something killed our happy music. I'll have to open it up again. We got to have the happy music. Hang on, almost there. Keyboard. Stupid happy music. There we go. Yeah, there we go. I'm so happy to be here. I love to trade Forex and Forex.Today. Yeah. Boom! Uh-oh. Can you see charts? Whatever I click was a hiccup for me. All right, so you got it? All right. Let me, all right, so good. You see it, I'm happy. You're happy, I'm happy. All right, so I'll just move on.com. Oh, you know what? I need to fire up my drawing tool. What currency do you see? Pig. Good. Good. All right, so what? This is, oh yeah, we drew this yesterday. You can see we're at a high up here in New York Open. And look at this. Some kind of buffoon drew a Fibonacci retracement study. And what is it that we're measuring? Why is there a Fib study? Well, if you're measuring a retracement, you're hoping for an extension, right? So the general idea, the sweet spot for buying and selling in a trend which at this time the trend is still down, right? So we're also assuming some sort of reversal. So the basic idea here is down for a while and then up. You could see in New York, we actually came down, made a 50% retracement, rallied up in Asia. Okay. Well, when Asia takes the lead, what do we call it? The Asia fade. Okay. So what happens is that Asia takes it north. What do the London boys do when they walk into the office? What do they see? Is price high or is price low? Come on, drawing tool. All right, so what does a trader do? Yeah, pretty complicated stuff, right? Now, the interesting thing is here in New York, we had a high near resistance. So what did I say yesterday? Well, you can't buy it there. It's just a matter of fact, right? So it's against the law. So it falls. Because, like, who would buy it? Besides an amateur, right? No professional would buy it at resistance. So it came down. Of course it came down. And then what happened? The people that wanted to buy it, buy it. See how much easier it is if you have control? So it dropped 50%. And the bulls that did want to buy it said, oh, there's my opportunity. I could buy now because I got a 50% retracement. And ultimately, it didn't work out, did it? Yeah, but they still made 50 pips. What's wrong with that? You're like, oh, I throw it away. 50 pips is like minnows, right? Like 50 pips. What is that, a putt? So whatever. And then we get this Asia fade. And so now we got this kind of action going. And is this a random walk, this fall here? Boom, 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 boom. Well, let's look at this. I drew as best I could from the bottom of that move to the top of that move. Okay. Price came all the way down, touched the psychological level, but it actually came down and touched the 786. It also touched the daily support 1. Daily support 1. Support 1. The daily support pivot point. The first one. There's 2 that I use. I don't use DS3 because if we're down at DS3, there's something else going on besides daily pivots. You need to adjust your thoughts. Okay? But it came down, psych level, support level, 786, and rallied. Okay? Again, only 50 pips, about. Okay? And so now what? Do you want to buy it? Here. Why not? It could go up here. Yeah, it's against the law. So, what do you want to do? Bum, bum. Plan A, plan B. Jimmy says wait for it to drop to 1034 and buy it. Good idea. Okay. It's only 50 pips, so it could be down here too, right? It'd be probably 2 cycles, I'd guess. Yep. No, I know. 1034. I'm guessing that that's where to be at that time. All right, so I'm looking at a 5-minute chart. Adam wants to go daily, and that's a good idea. Okay. But I still remember yesterday, like it was yesterday. I still remember our trade plan like it was yesterday. Yeah. Are you preparing for such a thing? Huh? What do you want to do with your trade? I want to rock. You guys miss Twisted Sister? I'll never forget it. I was young enough where it was like one of my first songs that I liked as a kid. It was really a popular song. What was it called? Is it We're Not Gonna Take It? We're not gonna take it. No, we gonna take it. Right. It was really a harmless song that it was on the radio everywhere. So one of my relatives bought the album for me for Christmas, and it opens up. I think the first song is the one that's on the radio. We're not gonna take it. No, we ain't gonna take it. And it's like a good theme song, and you could you know, I don't know, you could have fun. I think they played it in my elementary school when we were like playing basketball practice or something, right? And then what's the next song? It's called "You're Gonna Burn in Hell." You're gonna burn in hell, and this whole song's about the devil and going to hell, and I'm like, nice Christmas present, nice Christmas present. Yeah, that was great. And variety, spice of life. Yeah. So one of my relatives was in the doghouse, I'm sure, huh? What the hell did you buy my kid? You ruined him. Okay, so anyways, there's the plan, Stan. Right? There's the plan, Stan. But so now what? How are you going to play it? 4-hour might be helpful. Look at the green candle, yo. Right? That's interesting. Yeah? Isn't it interesting, like right at our 786, right at the cycle level, right at the 4-hour 200 EMA, we got a dipsy do, a little whoop whoop, a little up whoop, a little whoop whoop. Okay, you notice how it just takes us to the next level? Oops. There we go. Right? We already have it marked up. How clever is that? Wicked smart. Okay? So at some point, you kind of got to get on the clue train, right? And if you're a bull, and I'm not saying you need to be, but if you are, what is it that you're doing if you didn't buy the dip? What is your plan? Maybe on a smaller time frame, you're trying to grab this within here, but like you're waiting a long time to make a decision. Right? Waiting a long time. Not sure what you're looking for. But maybe if things go well, if you do get it, maybe on a 5-minute chart, there's another 5-minute cycle like we showed. And at some point, your stops may be down here. And maybe at the end of the day or Asia Open, you're able to move your stop into your entry in your hero or zero scenario. Yeah, Richard says, he's going to wait for a few more bears, which ain't a bad idea when you're at resistance, right? But there was all these things like, okay, you had clear support, right? There's no doubt about that. I mean, by definition, it's the support pivot. It's a psych level. It's a fib. Okay, all kinds of things. But let's say you just didn't like it. Wrong time of day. Whatever. You still have this move, which is this high is higher than that high, which is called a 1, 2, 3 reversal pattern. But it's only valid if you're at support. But we already identified that. So what do you do now? You're supposed to fib this and catch it somewhere between the 382 and 618 Fibonacci retracement. Huh. Well, will be. Right? Wayne, do you need to have a fundamental bias on something before you trade it? Ideally, but not on the short time frames. Okay? But I have a little bit of bias on this one because I predicted a year ago that it would be going up now. That somewhere in April, the Great British Pound would rally, right? So I'm going to drink the Kool-Aid. Let's say I already drank the Kool-Aid. So, because perception creates reality, right? The British pound might be going up and it has nothing to do with any of my fundamental analysis that I talked about a year ago. Complete coincidence. And that's a huge likelihood. But you're going to believe what you want to believe, right? Perception creates reality. It's confirmation bias. I'll say, aha! Look, it's going up. I told you so. But it could be completely random, which is fine. I don't care. It doesn't bother me. At least I know, right? But I still want to trade it if I can. What? Right? 2 years ago? Oh, it's like the USD 2 years ago. Sorta. Is the UK still doing quantitative easing? Yeah, no, okay, but yeah, sure. I'm looking at more of like other things, right? But it's sort of like, why is the U.S. stock market rallying now? I'll give you a hint. It really doesn't have anything to do with the United States of America. It doesn't have to do with American companies. Earnings were not that great. We're all, the market's at least fairly valued. We're at resistance. We're at a top. It's not a good opportunity to buy. But I still think the stock market's going to go up. And I think we talked about it a lot yesterday, right? The cheap money aspect, yeah, okay, that's going to be part of it. But it's more like the expensive money, right? The rates going up hasn't hurt, but that doesn't necessarily propel us to a new high, right? Don't we need new money? Do you think the average American that maybe not fully invested into the stock market suddenly says, now I need to start buying stocks? James says, no rate hikes, no inflation, possible future Q. No, I don't think we're there at all, Jimmy. I like your logic, but not in this case, not when it comes to the Fed. What I'm thinking it has to do with something that I talked about a couple of days ago, and that had to do with these fake invoices and receipts and stuff coming from Hong Kong to China, and which I was guessing, it was up like 300% month over month. One of the things I threw out there was that it's Chinese billionaires getting their money out of China. Right? So like a Hong Kong company invoices a Chinese company, so the Chinese company pays the invoice of millions and millions and millions of dollars, and it all goes to Hong Kong, and it's all fake. Hey, and by the way, when you go to that part of the world, this is how the world works. There's all kinds of loopholes for getting money out. So, what do they do with the money? Chinese stock market's collapsing. That's why they got to get it out. What do they do with it? Put it in a bank and earn zero? Put it in Iceland? Buy the American stock market. Boom! There you go, Ryan. There's where the new money's going to come from. The $1 billion leaves, or JGBs, good one, Joseph, I'll give you that, right? But I think, okay, if this was retirement accounts, probably like JGBs. If it was some billionaire sneaking his money out of China, out the back door, nah, he's not going to buy JGBs. He's going to throw a whole bunch of money into the U.S. stock market, and he's going to go to Vancouver, Canada, Vancouver, British Columbia, and he's going to buy a beautiful apartment with a gorgeous view worth 5 million Canadian dollars. Never live in it. Now, why is he going to do that? Because if he ever has to get out of China, or let's say the Chinese government one day just comes in and says, all right, we're confiscating your money, we're nationalizing, we're doing whatever, we're going to throw you in jail, take all your money, whatever the case is, right? He gets out of China and he has nothing. All this money in China stays in China, but now he can sell his apartment in Vancouver and have 5 million cash. Boom! But he might have a bunch of them, right? And by the way, if you got that kind of cash, Canada will give you a citizenship. Oh yeah, you can buy it. And I learned if you want to buy yourself a citizenship that guarantees that you're not going to be extradited, New Zealand's the place to go. Did you know that? 2 million Kiwi dollars buys you a citizenship, and they'll guarantee you that they won't extradite you. And now you know. I'm like, New Zealand? That doesn't sound right. Come on, Kiwis. Get your act together. Not on the beaches, Freddy boy. Only in the mountains. It's one of those places where you can surf in the morning, ski in the afternoon, drink wine in between. Now you need a private jet, but it snows there. Sure, it snows in New Zealand. So anyways, there you go. Yeah, there you go, Sally Pup. So, I don't know. You got to make a plan, Stan. Okay, because the higher it goes up, the less likely it's going to continue going up. San Diego, first of all, they don't even have surf. I don't know where you're going to go. Where? Bear Valley to go skiing? That's nowhere near San Diego. Surf mountain and desert. Yeah, I wouldn't. Yeah. All right. Boop. So there's your pig dog. Okay, and of course, every trade on the planet you should be setting up in similar fashion. For example, which one should I give you? I'll give you a tricky one. Well, no, let's not do a tricky one. Yeah, no, yeah, let's. Hoo, 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 hoo. Sing, sing, arriba, arriba. Manny wants a Euro kitty cat, huh? All right, I'll give you a difficult one. Daily. Up or down? You don't even have to look at the price. I don't give two hoots. No. 4 hour, however, says, whoa, spaghettios, right? Tricky. Now, if it's an uptrend, you don't really care that much. Because if it's an uptrend, you're simply buying dips, but you're not necessarily selling overbought. Of course it's overbought. It's an uptrend. Everyone's buying it. Okay? So that's where it kind of gets tricky. So how do you buy if you're not using the 4 hour 4 hour stochastics interlocked with the daily stokes? So like what I teach you is I make my decisions on the daily chart, and I usually do it pretty quickly. I'll say, set sport with the kicker. Okay, bullish, down, next. Okay, this says not necessarily ideal trading conditions, but it's certainly not a sell. If it was down low, it'd be a buy, but if it's up high, I don't care. It doesn't mean anything to me. Of course, it's overbought. Everyone's buying it. It's an uptrend. Come on, right? So now how do I catch it? Which it says, unfortunately, just a correction. Yeah, it could be. This is not typically the time of year I hold the yens, right? I think you can make 300 pips up, but I wouldn't be shocked if it was 300 pips down. But what are you going to do, right? Are you not going to trade it? Okay. Ryan says hourly Stokes. Okay. And a Stokes in this case is probably more of a permission, right? Because an hourly Stokes cycle could take a half a day. Well, that's not necessarily a trigger, right? So let's look at the hourly. So over the last, 4 hours, there was possibly an opportunity to buy. Correct or incorrect? Hell yeah, says Ryan. Ryan, watch your mouth. All right. All right. So again, it's green lights. Like, Roger that. You got, missions a go. Green light. Thank you, Overlord. All right. So now what? How do I pull the trigger? Give me a safe conservative trigger. Okay. Well, first of all, you got to drop into a 15er. And maybe something like that. But remember, it's it's only valid if you're at support. Huh? And now this is where you also use things like candlestick formations, patterns, moving average crossovers. Before all of this, it's all gobbledygook. But once you're set up, now it's meaningful. So for example, there was a guy that wrote, I don't know, probably 800 pages worth of analysis on candlestick patterns. Now he says he went to Japan, spent years of his life doing research, going through Japanese books, finding out the top 1,000 patterns of Japanese candlesticks, and personally translated it and brought it to the English-speaking world. And for only $800 for a book, you can learn the secret to Japanese success in the trading market. All right? $800 for a book. You want me to tell you what the book said? All right, send me $99. I give you a good deal. No, I didn't buy it. I give you a good deal. $99. Very good price. Very best price. Okay, bro. Okay, bro. Special deal. VIP. Right? All right. Here it is. If you get a reversal pattern at support or resistance, it's valid. If you get a reversal pattern not at support or resistance, then it's not valid. There you go. And I couldn't give two hoots what you consider a reversal pattern, because what really matters is that price is at support or price is at resistance. And it seems to me if you simply buy at support or sell at resistance, you're pretty good. You have a pretty good chance. But there you go. There you go, eh? So anyways, so this is an $800 secret here. This is only relevant if you're, one, bullish, and two, and even more importantly, you're at support. Because who gives two hoots if it's oversold at resistance, right? See what I mean? Because you don't buy at resistance, so it's worthless information. I don't want to do EuroCAD, Gavin, but you know, I'm teaching you how to do your own analysis, so you know, no big deal. Okay, so anyways, so whale oil B. It's pretty good. Hey, could it possibly have something to do with the 618 Fibonacci retracement? And you're a bull, right? Yeah. I'll get to that. Okay. But you also have this opportunity, which I showed you. Right? Remember, I just showed you not long ago the higher high, higher low scenario? Holy smokes, eh? This is your second chance. That's your reload. So you could have an entry in here, stop jammed, tick, 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 and move up. Another stop entry here, stop also at your break-even point on your first one. And now that it's made a higher high, you have both stops here, one at break-even and one that's plus 10. All right, wow, a whole 10 pips locked in. But you got a couple of 100,000 risk, right? And your worst case scenario is you make 10 pips. Whatever. You had something similar in pound yen. Well, what I'm trying to teach you guys is that you probably had something similar on pound yen, euro yen, Aussie yen, Kiwi yen, CAD yen, Iceland yen, to some variant, some variant or degree of similarity. Does Kiwi have that? Well, Kiwi was at support 3 days ago. It was oversold. So was the 4-hour. The 4-hour went up, made a higher, not a higher high, but it did make a higher low, then made a higher high, and now is in a role reversal. Yeah, so, yeah, you want to do Kiwi? I got you Kiwi right here, huh? So the thing is, I want you guys at some point to be able to do all this analysis in less than 4 or 5 seconds. That's where you need to be one day. One day when you're all alone and the world is cold. All right. Pretty complicated stuff, right? Seems like support. Okay, now this doesn't put you into a trade. This just says when you dip down below, it just says red alert. Right? That's it. In the next few days, if support holds, you will probably have an opportunity to long. That's all that means. Okay? That's all it means. Shields up, red alert. So you could suddenly say, well, you know what? In the next couple of days, I'll probably try to get long. Now, that's helpful, isn't it? Now, I did tell you last week, it has gone up 150 pips, right? Can anybody confirm that we discussed CAD yen, Kiwi yen, Euro yen, pound yen, and Aussie yen all being set up for a long? Well, let's say they're all up 150 pips. Somebody that tells me that's about 750 pips in the last 3 days. Hey, well, you're welcome. I still didn't get my box of cigars. Just like common courtesy, right? I invite you over for a party, you bring a bottle of wine, right? So anyways, there's the start. 4-hour at the same time was about ready. Fine. Okay. But notice the patterns. You want to do it on the hourly, maybe? Someday. Okay. So the other two currency pairs we looked at had Fibonacci retracements, right? One was a 618, one was a 786. Boom, 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 boom. Come on, come on, come on now, trade me, baby. And can't you see that I am not afraid? All right, 618. Oh, snap. Okay, a 618 predicts what? A 1382 Fibonacci extension. Now, for about 10 minutes, it was a little higher. Dropped back below the 382. Then it tried again, and then dropped below the 382. Then it tried again, and then it dropped below the 382. Then it tried again, then it dropped below the 382. Then it tried again, dropped below the 382, and the 382 held. Oh, snap. Okay? Coincidence? Yeah, total random walk. All right. Now what? Was this support in the past? Wow. Congestion, 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 congestion. Right? So this whole thing is of interest, this whole area. So you can measure it, let's say, you could do it this way and call this, what, a 382? Because this is your buy zone. Ah, come on, drawing tool. Keep double clicking at it. All right. You can call it that as your buy zone, which is valid, right? Or you can measure it this way, because remember, fibs are subjective. So if you did it that way, your buy zone is slightly different. It's this way. Okay. If you're doing price action now, especially on a smaller time frame, like a 5-minute instead of an hour, or 15-minute, you want to do 15-minute? Okay. Then what you do on this time frame, okay, is you take this old resistance, drag that across, and that's your support. Okay. And on this time frame, you probably want a Stokes kicker. Okay. Okay, and let's just mark this here. What would you want the hourly Stokes to look like at that point? Jimmy says we just got the higher high for today. Maybe. Boom! Shalakalaka. Ooh, yeah. So you had the hourly and 15 lined up, and you didn't take the shot on a higher high, higher low, 1, 2, 3 reversal pattern, roll reversal, Fibonacci retracement, psychological, maybe, I don't know. I think you can only miss these things if you seriously just don't have a trade plan. Okay? And of course, why was, let's mark this like this area. Why was this a top? See if I can adjust this. No, it's not going to let me. All right, so why was this a top? Daily M4, okay. Profit target, well, why? Are you ready? Are you ready for this? That's as far as it'll let me zoom in. I have to even kill the vertical line if it'll let me grab it. Okay, let me kill that. And we were measuring this. It didn't translate on the time frame properly. Oh, but I can move it. There we go. So we're talking about this. Can you see it now? I cannot zoom anymore. That's fully zoomed in. we're talking about the top of this wick. Daily 21 EMA, dynamic resistance. So let me ask you, do people use the daily 21? Yeah. Oh, snap. Yeah, good opportunity to take and get out, right? But it doesn't mean it can't drop, and because we know eventually it's going to break. Okay? But it may not. So if you're a bear, that your trade plan is this. Okay? So now, even though we've talked about this for like 20 minutes, being a good long, you can see why being late and having no plan is a recipe for failure. Because now if you're getting on the clue train, well, you've missed the entire point of buying at support, 3 days ago, 2 days ago. That's really Sunday, right? And now it's a bear's opportunity, because what are they doing? They're looking at resistance. They're using their moving averages. They're using their Fibonacci. And they have their trade plan set up. So if you're slow as molasses on a cold Georgia morning, you're going to get scalped. And that can get very uncomfortable very quickly. Winston, the drawing tool is Camtasia Studio, and I think it's $250 maybe. So you go to techsmith.com for that. So interesting, right? So do you wake up in the morning and say, today I'm going to be slow as molasses on a cold Georgia morning? Is that your daily mantra? Okay. So there you go. CAD yen at the daily 21. Okay. On the up, excuse me. On the upside, pound yen has broken the daily 21. Euro has broken the daily 21. And Aussie is nowhere near the daily 21. CAD yen is at the daily 21. And this Kiwi yen has tested it and stopped. So Aussie is weak relative to the European currencies. And CAD and Kiwi are probably somewhat neutral. So, the commodity currencies are not incredibly bullish. European currencies are much more bullish. Okay. Did we do the beast yet? Alan, you don't really know unless they tell you. But, I've traded true intervention on multiple occasions. And if your currency jumped 600 pips in 3 minutes, it's probably intervention. And one time I was coaching, this was, I don't know, 5 or 6 years ago. There was about, 50 or 60 people in the room. And I think I had like 10 yen trades open, right? And I'm long. I think it was long the ends, and I don't even remember what it was, but I just had them up open, and we were talking about them and whatever was going on, and then Japan intervened. I think this is what it was. I can't remember. I don't think it was Swiss National Bank. It was well before that. So, well, you know what? Maybe it was the Swiss National Bank. But before the crash, the previous move, I don't know. It was something like that. I don't know. I can't remember if it was Japan or Switzerland or whatever. But I do remember I'm coaching, and it's all nonchalant. It's like talking about, the Kiwi yen right now, like we're doing. I'm like, yeah, I bought it at support, and I'm long, and I got my stop at break even, right? And I'm here, and I added another one here, and then I'm on the Kiwi yen, or the Aussie yen, and the pound yen, and we're talking about it. It's all good. And all of a sudden, boom! Just out of the blue, every yen pair jumped like 500 pips in 1 minute. And I'm like, holy crap. I got all these trades open. I'm like, oh my God, hang on. I'm like, I just have to stop coaching. I got to manage all my stops. And I'm like, dragging my stops, and, platforms freaking out because of just the gapping and the volatility and the order execution this forces, and the world just freaked out. I'm like, holy crap. So I'm like, boom, locked in 620 on this one, 900 on this one, and I'm just moving these stops. I'm like, holy crap. And then you hear on Trade the News, rumor that, Bank of Japan has just intervened in the market. And you're like, yeah, good rumor, dude. Yeah. So when stuff like that happens, it's probably a central bank. Okay. Well, typically you are, but I did have like 2 or 3 small trades open that I bought. Probably the euro Swiss franc at support. Right? I think I had it's not, and I told everybody it's not a trade I like to do, but I kind of feel like I have to do it. Boom, dumb idea, right? But I remember talking about I feel like it's a dog and pony show. It's all smoke and mirrors. It's not the way to do it. But, and once again, it's a big but, the Swiss National Bank keeps telling me that this is the cornerstone of their strategy as a central bank. So I'm like, I kind of have to buy it at support if that's the cornerstone of their strategy as a central bank. I'm kind of required to like play it, but I'm not going to put some serious money on it, and I don't even like it. And I talked about it over and over and over for weeks. I don't even like it, but the Swiss National Bank keeps coming out and talking it up over and over. And then on a Monday, the head of the Swiss National Bank comes out and says, yes, it is still the cornerstone of their strategy to support the euro. And I'm like, okay, well, I'm still long euro, short Swiss franc, just like they told me. Switzerland's going to keep throwing money at it to support it. Who am I to, think otherwise, right? And then 48 hours later, they drop the bomb on the world. Just like, and it dropped 1,000 pips against me, froze the market. And these were tiny little trades that cost me a ton of money. And I'm like, holy sh! Yeah. And I thought it was going to be another financial crisis of untold proportions. Rumors had it that several major banks were going under. Several different brokers like Opari actually went out of business. FXCM went from the largest retail Forex broker in the world to bankrupt in the same day. It's just like, holy crap, just amazing. So it can go against you, but it is a pretty rare thing. Like, why would you be doing the opposite of what a central bank is telling you what they're doing, right? But you could be holding ruble debt and Russia could default on you. By the way, interest rates are below 9% now in Russia as of today. It dropped somewhere. I was reading that. I don't remember. So yeah, I can. But generally speaking, I trade in the direction of macroeconomics and central banking policies. So for it to go against me is a calamity. But isn't that how you're supposed to trade? One interesting thing I should say, and our time is up here, so I should probably say, like for example, New Zealand has intervened against me 4 or 5 times over my trading career, and it's great because they've never been successful at it, and nor has any other central bank really been successful at intervention. A great one is the idea of the Swiss National Bank propping up the euro. That didn't work so well, right? It's never worked. And so if you ever see a serious intervention, and it's been a while since there's truly been a true intervention, of any real magnitude, that it doesn't work. So go ahead and make some money on the way up or down, whatever the intervention is. So let's say New Zealand is trying to squeeze hot money out. So they're going to lower interest rates, for example, or intervene and just try to weaken the currency as much as they can. It will go back up. So go ahead and trade the intervention, go with the central bank, but in pretty short order, meaning in a day or two, most likely, you'll just pile back into the Kiwi long and make money that way. So just write it down and say short-term intervention, a central bank or even anybody, let's say you're Paul Tudor Jones and you're trying to prop up the oil market. You could probably do it for a couple of hours. You could probably do it for the morning, but you're not going to do it for a week or a day, right? You're not going to actually reverse the market. You could prop it up. You could even, push it up. But you better get the hell out of your trades before the market corrects. Ryan, that's always going to be a judgment call. I wouldn't rest everything on a oscillator. Okay. I want you to develop skills and experience so that you trust your judgment. I'd say above an oscillator would be pure price action, for example. So look, if you're at support and it's already in the process of reversing, make a decision. Limp in if you have to. Cut your lot size if you're not so sure. You're like, I want to buy this, but I just hate that 15-minute Stokes. Well, cut your lot size and put 20% down and say over the next 3 days I'm going to make 5 trades and build my position over the course of the next 24 to 48 hours versus just dropping down a lot and praying to God it goes up. Right? Just say I'm going to buy I might miss this cycle, but I'm only going to put 2 minis down. And then when it does cycle down, I'll buy 2 more. And then if it makes a higher high, I'll buy the next 15-minute Stokes down. And even though you might be basing all of this on a 1 hour, 4 hour daily Stokes cycle, you might just say, okay, based on what I see on the 4 hour and daily, every 15-minute cycle I'm going to put 2 mini lots instead of your normal standard. But over the course of a week, you might actually load up 20 trades. And if all but 3 are at break even or better, you're still only risking, $60,000, less than your original one. But now you have twice as much money in the market and you're building positions. Does that make sense? right? So you got this cycle and the next cycle and the next cycle and the next cycle and the next cycle. 4, 5, 6 times a day, you're putting in smaller trades in the direction of what you believe the prevailing trend is. And by next week, when it's overbought on the daily chart, you could have 35 trades open, all at break even, and you're up 92,642 pips, otherwise known as $7. Starbucks time. Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. Remember, Canadian dollar today. Oil inventories at 10:30. Everything else is blue skies. Good sailing. I'll see you tomorrow. I can't wait. Thank you for being on my team. I really appreciate your loyalty. Bring a friend tomorrow, huh? See you at Forex.Today. I'll upload the video ASAP. Cheers.